stock chart technical analysis with the piercing candlestick pattern, which could be considered the bullish counterpart to the dark cloud cover candlestick pattern, and to a lesser degree the bearish engulfing pattern. And in theory, it's less bullish than the bullish engulfing pattern. On this next chart, there's a major uptrend stemming from a bull hammer candle when combined with the two candles before it, which represent the final push of the downtrend. There's also the price action of a piercing candlestick pattern, and there's actually movement below those red candles with the low of the green candle, which eventually closes up towards the halfway point of those red candles, similar to a normal piercing pattern. The fact this green candle is also a bull hammer gives extra bullish sentiment to the second half of the price action. As price begins to fall again, here's a similar situation, except the second half of the piercing pattern's price action sees the formation of an inverted hammer, which adds extra bullish sentiment and also provides the possibility to just look at this like a single inverted hammer candle pattern. Because out of the two candles in the piercing pattern, the second candle has the highest high price and the lowest low price. So we wouldn't need to consider the high or low price of the first candle. And proportions with the real bodies are also quite good. This second candle closing essentially at the halfway point of the first candle's real body range. And in the bigger picture, the situation turns bullish quite quickly since price from the following candles immediately trades and soon closes above the high price of interest. And just looking at the reversal from a view of closing prices, it is indeed quite a sharp and quick upswing, which doesn't line up with any recent swing points, though it does line up with the secondary feature of the breakout point near the end of this bullish continuation. Although there was some support to falling price near the gap fill, there was only a minor pause to the new downtrend since there was little to no movement above the highs of these reversal candles. So naturally, attention will shift to be in line with the upswing we looked at recently. Again, it becomes a reference for support where bullish reversal candles are much more likely to form. Following these short-term developments closely, just like at the gap fill area, the chart is now noticeably flattening and even declining slightly, because although there are clear bullish reversal candles, no uptrend builds upon them by trading and closing above their highs. Instead, the opposite takes place with increasingly more red candles heading below the lows of these bullish reversal candles, and by extension the lowest boundaries of this support range, which shows the secondary aspect of a support range delaying a downtrend rather than reversing it. This next example shows another case where one of the two candles in a piercing pattern is also similar to a single reversal candle pattern. In this case, it is the first candle which has bull hammer qualities, and it's also the candle with the highest and lowest price of the two. And currently, there's not much progress in advancing over the high. In fact, the bearish advantage quickly returns and places focus on the lowest price of this piercing/bull hammer pattern, where there's expectedly some support, and in this case it's actually a green bull hammer, marking the short-term rebound up away from the 1350 range, where support is currently concentrating. On the bearish side, these shooting star candles are great references for resistance, which is currently prevailing once again in this well-established downtrend. That is likely to continue with this most recent downswing forming with evening star qualities as well. So it's not too surprising there's a break of this short-term support that is well defined by recent bullish reversal candle patterns, including the piercing pattern combined with bull hammer characteristics. That defines the lower boundary of a failed bullish reversal range. Speaking of which, one is forming right now with more success. This double bottom sees price stick to the upper boundary after the second upswing, in direct contrast to the previous case.